Welcome to the Best of U.S. Investors, two regular guys show. This is Mark and I'm Trent, and today we're going to do something a little different. We're going to talk about Bitcoin and how Bitcoin works, what it is, how it functions, and why you may want to take a look at it as a portion of your investment process. So let's get into it. Hey, Mark, how are
Hey, how's it
you?
going? Well, getting ready for the holidays, so might as well talk about Bitcoin. Nothing says Merry Christmas like Bitcoin.
Nothing like talking about digital gold.
Yeah, it's interesting. People our age, regular people, uh, don't really have an understanding of Bitcoin and what it is. And now, since it hit 100,000, people are more talking about it. You're seeing more of it in the news, and so I've gotten into it in 2020 when Michael Saylor talked me into it. When he talked himself into it, his company MicroStrategy owns 429,000 Bitcoin, so he went all in. I'm not all in, but I see the advantage of it. So I have it in my portfolio, both in raw Bitcoin form and through ETFs and other things out there like MicroStrategy stock. So we just wanted to we did a call with all our members and we went over Bitcoin and we got a really good review out of that. People wanted more of that from our members. And so we
Yeah.
thought we'd open it up a little bit to the Two Regular Guys show and see how it goes, for you guys. And if it opens your eyes a little bit or makes you think about it, that's what we want. There's always alternatives out there, and this is one of them. So hit that like button right away so we can get a little credit for this, and hit
Yep.
subscribe if you want. And we do this show once a week normally, and I hope you enjoy it. So let's talk a little
Yeah.
bit. Let's talk a little bit about Bitcoin. So, like I said, Bitcoin shot up above $100,000 for the first time this year. It was after the election. It went from about 62 to over 100,000. It's been up to 108. Okay, and that milestone was hailed by even skeptics as a coming of age for cryptocurrencies, as investors bet on friendly U.S. administration to cement crypto's place in the financial markets, and mostly Bitcoin. Okay, there's a bunch of cryptos out there. We'll talk about those as we go, but we're going to focus on Bitcoin being the largest value. So the total value of the crypto market has almost doubled over the year so far to hit a record just shy of $3.8 trillion. That's according to CoinGecko. So by comparison, when you think about that, Apple uh, alone is worth about 3.7 trillion. Bitcoin's march from the libertarian fringe to Wall Street has minted millionaires, new asset class, and popularized the concept of decentralized finance in a volatile and awful controversial period since its creation 16 years ago. Bitcoin has more than doubled in value this year and is up more than 50% in the 4 weeks since Donald Trump's election victory, which we also saw a slew of pro-crypto lawmakers being elected to Congress. Mike Novogratz, he's the founder of crypto firm Digital Galaxy, said, "We're witnessing a paradigm shift. Bitcoin and the entire digital asset ecosystem on the brink of entering the financial mainstream. This momentum is fueled by institutional adoption, advancement in tokenizations and payments, and a clearer regulatory path." So that's what we've been going through basically in the last since November 5th. And so let's get into a little bit of what Bitcoin is, at least from my perspective. And people have different ideas of what it was. Is it a currency? Is it gold? What is it? So for me, Bitcoin is a form of digital capital. Okay, Bitcoin is a store of value for me. It's like a savings account that doesn't deflate. Okay, it's something like owning an art collection that increases in value. Okay, traditional capital. Okay, as opposed to digital capital. Traditional capital refers to physical assets that can be used to generate wealth, and these include tangible assets like like land, okay, buildings, precious metals, machinery, paintings, rare cars, equipment, uh, and then you have financial assets like stocks, bonds, and cash. Okay, you can have a bond in your hand. Okay, you can have a stock in your hand. I don't know if you can anymore. We used to be able to, and of course you can
Yeah.
have cash in your hand. So this is how we, individuals, families, and companies, traditionally build and store value. You buy a house. This is part of my retirement plan. You buy some land, maybe you get some rent off of it. You buy a warehouse. Okay, it gets where those are the traditional ways. Digital capital, what we're talking about, Bitcoin, is a newer concept that encompasses intangible assets created and used in the digital realm. And Bitcoin is a digital asset. Okay. Bitcoin advocates believe that Bitcoin is a superior form of capital compared to traditional assets like gold or fiat currencies. The digital scarcity. Okay. This is a primarily Bitcoin's main properties that are very unique are number one, it's scarcity. Okay. Bitcoin's limited supply, only 21 million, and its existence as a digital asset make it a potent store of value. So it's a supply and demand. You only have 21 million Bitcoin out there, and a Bitcoin can be divided into 100 million components called Satoshis, just like a dollar can be divided into 100 pennies. So you can buy Bitcoin. You can buy a dollar's worth of Bitcoin. You can buy a whole Bitcoin if you want to spend $107,000. So, and there's only 21 million. So once it's mined up, and Trent is a miner, once it's mined up in 2045, there's not going to be any more made. The Treasury Department can't go and make more money. Okay, it's there, it's finite. Okay, so go back to economic supply and demand. When the supply is short, demand goes high, and that's what we're seeing. Security is the second property. The blockchain technology ensures the security and immutability of Bitcoin transactions. Okay, everything's on a ledger. You can go look at it. It's right there. Nothing's hidden. Okay, it doesn't go through an intermediary like a bank. It doesn't take 3 days to get approved. Uh, Global accessibility. Bitcoin can be accessed by anyone with an internet connection, regardless of your geographic location. Resilience. Bitcoin is not subject to the same vulnerabilities of traditional financial systems, such as inflation and government intervention. Bitcoin is decentralized digital currency. It operates on a technology called blockchain, which is a distributed ledger that records transactions across many computers. This technology ensures security and transparency, so it's never been hacked, Bitcoin. You've heard about hackings, but that is into like exchanges, like FTX, or what was the other one?
Mount Gox, I think it
Mount
was.
Gox.
That was the original catastrophe.
Yeah. And
Yeah,
banks get hacked too. You can it's for your regular money, people get shut
yeah,
down. So, but Bitcoin, the system, the blockchain system has never been hacked. So by viewing Bitcoin as digital capital, that advocates and encourages individuals and institutions to consider it as a long-term investment and a hedge against inflation and economic uncertainty. So to further explain this, I'm going to utilize some slides from Michael Saylor, and he's the CEO of MicroStrategy. He's the one that got me involved in it. And why recreate what's already been created? It makes sense to me. So uh, uh, I'm going to use his slides. But first, I want to explain a couple of concepts about inflation. I want to talk about monetary inflation and consumer inflation, okay, and how it's eating up your traditional store of value in stocks, bonds, real estate, and all that. So monetary inflation refers to the increase in the money supply within an economy. This can occur when a central bank prints more money, yeah, like they're doing right now, okay?
yeah.
Or when commercial banks create credit through lending. When the money supply grows faster than the economy's capacity to produce goods and services, it can lead to a decline in the purchasing power of money. You can see what's been happening, okay? Your ability to go and purchase more is less now because there's more money out into the system. It's like when a company issues more shares to bring in more money to run the company, you as a shareholder, okay, let's say it was 100 shares and you own 10 shares, you own 10% of the company. If the company decides to double that to 200 shares, now you only own 5% of the company. You've been devalued. And the same thing happens with our money. And it's happening every single week when the treasury bonds and bills get sold. The other
Right.
kind of inflation, which we have, is consumer inflation, and that's known as price inflation. Just go to the grocery store and you know what I'm talking about. It measures the rate at which prices of goods and services increase over time. It's calculated by tracking the changes in a basket of consumer goods and services, such as food, housing, transportation, and healthcare. So there's a relationship between the two. Monetary inflation often precedes consumer inflation because they're stoking the amount of money out there. So when there's an increase in the money supply, There's more money chasing the same amount of goods and services. That leads to higher prices. This in turn reduces the purchasing power of the consumer, which is us. So we're getting hit in two fronts: monetary inflation and consumer inflation. So let's look at some charts that Michael Saylor has and go into this just a little bit further. Okay, let me lock this up here. Okay. So over the last 14 years, few asset classes outperform monetary inflation. Again, this is from Michael Saylor from MicroStrategy. So he has gone back and calculated that monetary inflation, inflation caused by printing of money, is around 13.3%. Consumer inflation, you look at the CPI and PPI, and, they say it's 3 point whatever percent. It's actually probably 8, 9%. If you've gone to the grocery store over the last 4 years, it's probably gone up 20%, but we'll just use his chart. These are just common asset classes that we store our money in, okay? Commodities, cash, uh, emerging market stocks. And you can see over the last 14 years, annualized from 2011 to 2024, if you are in emerging markets, US cash or commodities, you're actually losing money to inflation, okay? Total bond market, you can see right here, we're not even hitting consumer inflation. And then when you get up to long-term treasuries, you got a little bit more, you're hitting 3%. It's a little higher than what the government tells us inflation is. But if you go up to the monetary inflation because of printing money, you can see that if you were in the S&P over these 14 years, you're pretty much breaking even after your purchasing power has been distressed. If you were in U.S. growth, which is basically the Mag 7, or the U.S. NASDAQ 100, which is really the Mag 7, okay, you can see you've broken ahead a little bit from 13.3. You're up to 2.5%. Okay, here you're up 4% over the last 14 years. So think about that when you put in your investments and you get your statements this week or next month, on what you did next year. You're probably going to see if you were in the S&P, you probably did pretty well. You're probably up 27%. If you have a balanced portfolio that a lot of RIAs will give you, you might be a little less. And you can go back to this chart and look at it and say, what was I in? And you can see why. So if you look at the same chart, but you add in Bitcoin, and this is just from the last 4 years, Bitcoin compared to this last 14 years, over the last 4 years, Bitcoin has returned 60% on average each of those years. So you're getting from 13.3 where you need to be to 60%. So you're up 40 some percent above your inflation level. Now, this chart was incredible to me when I looked at it, like, why wouldn't I, which I already do, I own Bitcoin. Why wouldn't I be in an asset class? I don't say I have to go all in, and this is not financial advice, but why would you ignore something like this if it's sitting out there? And I get a lot of people, regular people say, I don't understand it. Well, go and learn like I did. I spent hours and hours and hours watching videos, reading things to learn about what it is. So when you look at like over the last 4 years, we'll just tighten it up. Bonds were down. You lost money on bonds in the last 4 years. Gold was up 6%, real estate 10, S&P 15. Okay, Magnificent 7, 29, and again Bitcoin 60%. Okay, so this is, by the way, is 4 years ago is when MicroStrategy started buying Bitcoin in their treasuries, and that's when I started buying, was 4 years ago too. So again, I look at this chart and I go, why wouldn't I put some percentage of it in my portfolio as a risk asset? This
Right.
Magnificent 7, those are risky. S&P 500, those are risky. Real estate, you could have increased property taxes. You could have your land condemned or taken over by the government. Okay, there's a lot of
Right.
risk in everything. Gold, they could steal your gold. Okay, whatever. So again, and jump in here anytime, Trent, if you want
Yeah.
to. Otherwise, I just keep rambling.
No, I honestly, I look at this and I think the initial probably thought to people who have not really dug into Bitcoin, they look at this and they go, well, that's the last 4 years. What about the last, 10 years, 15 years? Has Bitcoin gone down? And the answer is yeah, it has in dramatic fashion. I think 3 times since 2013.
It goes in cycles, yeah.
Yeah, but what I think this really emphasizes here, this chart is diversification, and that what a lot of people will be saying is you got to be 100% Bitcoin. Well, no, that's not smart. It's diversifying your portfolio so that you can outrun monetary inflation is really the biggest key here is if you're looking at retiring in the next, say, 10 years, you're 55 like myself, you have to outrun this inflation demon that's coming after you. And
Yep.
if you're just in the Mag 7 through bonds in this chart, you're not. You're not outrunning that. And that is the crippling part for people when they get into retirement because a lot of people don't think about this is your healthcare costs go up and they ain't running at a 2.9% inflation rate. I'll guarantee you that.
Oh, yeah.
I mean, my health insurance this year is doubling.
Look at your
And
house insurance
my
and property taxes. Yeah.
exactly. So what Bitcoin represents here is an opportunity to outrun inflation and to achieve those dreams. I mean, most people don't know what the Mag 7 do. You know, I mean,
Yeah.
if you think about it, I mean, if you really understood their businesses, you go, what?
Well, and
But
then look at their valuations. Okay, they're
yeah,
skyrocketed.
yeah,
So, I mean, talk about risk. Okay, risk
right.
reward. The
Yeah,
reward has been high, but the risk is getting higher because of their valuations. You know.
exactly.
Yeah.
Exactly.
Okay. All right. Let's see what the next slide looks like. Woo! Here we go. This is kind of fun. Again, thanks to Michael Saylor from MicroStrategy. So
Yeah.
in the last 11 to 14 years, when you take and you divide up these segments, okay, who the top performer was, Bitcoin was the strongest asset for 11 of 14 years. So 11, 12, 13, okay, went up 1,300%, 217%, 5,500% in 2013. In 2014, US REITs, okay, Bitcoin was down 57%. Okay, so it went from first to last. So you can have volatility. And again, this is early on. And then in 15, 33.74%, 123.31%, 1,400%, and then US bonds. 18, we kind of had the start of a little recession. Uh, and you can see Bitcoin went down 74%. Okay, so again, not for the faint of heart. In 2019, 93% up. In 2020, 308%. 2021, 57%. Now these are the pandemic years, okay? And then
Mhm.
we had 2022 where the markets kind of went down. Bitcoin again went down 93 percent. So you're seeing about every 4 years you have cycles, okay, that Bitcoin goes through, and it's the winter, it's
It
spring,
went it
summer,
actually
fall.
went down 63%, not
63.
93.
Oh yeah, 63. Sorry,
Yeah.
my dyslexia is going in.
No
But then,
worries.
here we come back to 3 years of 158%, 45%. So you're seeing a pattern. And you can go back and in future videos, we'll look at Power's Law and different things to show you these
Yeah.
cycles and how it goes. But this is how the history has been. So again, I look at this chart and you look at number two, gold, emerging markets, US equities, REITs, commodities, emerging markets, gold, US equities, gold, REITs, gold, US equities, US equities. But number two, okay, let's just go to 2024, 45.6%. US equities is 1529. Number two is so far away. Bitcoin in 2023, 156%. US equities, 26%. Okay, so the difference is catastrophically larger. Okay, so again,
Right.
I look at this chart for me personally and say, why wouldn't I want to have some of that in my portfolio?
Well, it's as you know, I spent what 21 years as a financial advisor with new clients, especially those who are really educated in investing. You slid over this market quilt. It didn't have Bitcoin in it, but you slid it over and you talked about large cap, mid cap, small cap. You talked about equities, bonds, the whole bit. And what this represented was that quilt or market quilt represented was diversification. That if you diversified, over time you would do pretty well. Well, this brings in the Bitcoin element. And because Bitcoin is very volatile, it has a lot more oomph to it, energy to it. It can go up 5,000% or yeah, 5,000% in a year, but it can also go down, 75% in a year. And that's really where I think it's very important to emphasize. If you're going to add Bitcoin to your portfolio, unless you're just a maximalist like Saylor is, um, adding a portion of your portfolio to Bitcoin can even out those negative years and also highlight or exponentially grow in those fantastic years. And so it's like anything. You got to rebalance. You got to allocate throughout the year and really manage your portfolio. And I think this is, more and more we're going to see Bitcoin come into people's everyday portfolios as people understand them more.
Yep. Okay, let's move on.
Mhm.
Okay, so this is global wealth and it's distributed across the variety of assets. Okay, so total global assets is 900 trillion today. Money has 120 trillion. Bonds has 300 trillion. Real estate has 330 trillion. Equities, which a lot of people focus on, is only 115 trillion only. Okay, but it's smaller than money, bonds, and real estate. Cars and collectibles, 6 trillion. Art, 18 trillion. Gold, 16 trillion. And as of this chart, Bitcoin was 1.8 trillion. I think we're over 2 trillion now. But this
Yeah.
is this is our box right here. So there's a lot of room for money to flow out of these and into Bitcoin. And you'll see these, as an asset class, as we get more accepted in the Bitcoin world, this will grow. And there's a lot higher amount of assets that can go into Bitcoin. And we're seeing that now with ETFs. We're seeing that now with corporations buying it. We're seeing with banks buying it. We're seeing countries buy it. Okay, so we're seeing that asset class will probably grow. And the difference between that is money, you can always print more money. Okay, uh,
Yeah.
but you can't print more Bitcoin. Okay, real estate's out there. Again, you say you can't put more real estate, but Manhattan was built onto to create more real estate. If you needed
Right.
it, go over to what's the country, Abu Dhabi or whatever in the Middle East. They built that huge island out there and put houses and stuff on there. China's building islands, okay, and putting military bases. So think about that. Anyway,
Yeah.
so 900 trillion is where the
One thing,
assets are. Go ahead.
one thing to think about is in 1929, when the stock market crashed, how many people in the United States do you think had access to stocks compared to today? How many people had access to bonds or real estate? Fractional amount. So as time has gone on, we've become more and more an increase in access to equities. 401k plans accelerated that. Okay. So you see more access to these asset classes. You see this expansion in the growth of these asset classes. Bitcoin is no different. Was it February of this year, 2024? People started getting access to Bitcoin via ETFs, exchange traded funds. The only way you had access to Bitcoin prior to that was to buy Bitcoin outright. And that was, for a lot of people, a complicated process. Now that's gotten easier over time. But the more accessibility to this, the more avenues that people have access to Bitcoin or crypto in general. I hate using the word cryptocurrency, and because it is not a currency, crypto, we're going to refer to it as crypto in general, people will adopt it. So you'll see ETFs will become the easiest way for people to do that. And they've done that in the last year using ETFs. And I think that's why we're seeing that move from 1.8 trillion to in Bitcoin, Bitcoin value to this morning it was 2.1 trillion. And people have more access to it because they have more avenues that they can buy in places where they're comfortable with, like their brokerage account.
Yep.
They can buy it. So
They
I
can
see
put
this
and they can use that and put
exponentially
it in.
growing.
They can put it in the retirement account. And the other thing is the institutions couldn't provide it for people, even if you wanted,
Right.
because they didn't have a way to do it. Well, when BlackRock and 14 other major money companies came out with their ETFs, BlackRock, it was the most successful ETF ever in the history of ETFs, surpassing
Yeah.
their gold ETF, BlackRock. And you must remember that at first and way back when, Larry Fink, the CEO of BlackRock, I mean, he was totally against Bitcoin, totally against it. Like a lot of people are when they first get into it. So he's changed his tune on it, and BlackRock is now probably the largest holder of Bitcoin outside, as an ETF company.
Yep.
So again, that's a good point. So in fact, here's the ETFs. Well, we went right into it. This year, 12 out of the top 20 ETFs launched in 2024 are related to Bitcoin, Ethereum, or MicroStrategy. You can see here's BlackRock's IBIT, okay, year-to-date flow. Fidelity's ARK, Kathy Woods. You got BITB, Bitwise, MicroStrategy's Yield Max. This is an option income strategy. I also own that one. HODL, BDU. These are all Bitcoin ETFs. Burr, BTC. This is Grayscale. They were one of the original trusts. Um,
Mm-hmm.
and you got 2X on MicroStrategy if you want, and then you've got Fidelity came out with an Ethereum fund. So you can see it's got a lot of attention this year in the ETF world. So you have the ability as an investor, you have ability as an institutional advisor to now put
Mm-hmm.
people into Bitcoin. So when I go and buy IBIT has to go out and buy Bitcoin and put it in their treasury that they have held for me. I can't take it out as Bitcoin at the moment. So when you sell it, you sell it. So you never can take possession of it in an ETF, but you own it. So if the price of Bitcoin goes up, you can expect that the price of these ETFs probably go up also with it.
It's really no different than if you bought the triple Qs, QQQQ, which is the Nasdaq 100, and they go out and or you put money into the Qs and they go out and they buy Apple. Well, you don't actually get to own Apple outright. You can't just take your portion of Apple out of that ETF and take custody of it. So it's the same thing with IBIT and all these other ETFs is you're buying a basket that owns Bitcoin in this case, and then one of them, the Fidelity one, owns Ethereum, which on a later date we'll talk about Ethereum and a couple other the different crypto coins that you can buy. But this is an easy way, easy entry. You can buy it in your IRA, you can buy it in your Roth. I don't believe a lot of 401ks have access to this unless it's a self-directed 401k. So that world has not adopted this as of yet. But you have the ability to buy Bitcoin in your brokerage account via an ETF now.
Yep. So you can also do it. I have Fidelity. You can open a Fidelity crypto account and buy Bitcoin or Ethereum and have actual Bitcoin or Ethereum. The thing you can't do is take it out and put it in cold storage, which we'll talk about later at a later time too. So you can't actually take possession of it. You'd have to go to a Coinbase type account where you can actually take it out, put it on cold storage, put it in your pocket, and move to El Salvador if you wanted to. Okay, and take it with you. Gold you can't do that without a lot of trouble in a lot of big trucks. But uh,
Right.
so anyway, yeah, there's a lot out there. This is just growing. Like you said, it started less than a year ago and it's become huge. So again, go back to supply and demand. 21 million Bitcoin out there. Look at the demand that's out there. That's why you're seeing these prices go up in Bitcoin. So when you look at market cap, Bitcoin is now the seventh largest and maybe by market cap. It's the most recognized, widely held, interesting, compelling investment asset in the world. It just passed Saudi Aramco. Okay. And now we're at 2.1. You said we were catching
Yeah.
up to Google. Okay. If this continues to go up, if it hits 3, we will move up past Google and Amazon to Microsoft. Okay. If it hits 4, only thing left is gold ahead of us, then we've got bonds and real estate. So we've been moving up fast. As this moves up as an asset class, it gains more and more credibility, and more institutions and more people, more and more corporations, more and more governments are looking to add Bitcoin. And again, I go back to 21 million only.
Yeah, I think
Comments?
yeah, this is all about adoption. Think about when gold first sort of hit the scene as a precious asset. Not everybody owned big, or gold in this case, but it was the adoption over time that has driven it to $17 trillion in market cap. this is no different. Nvidia 5 years ago was not a $3.6 trillion company. It's adoption. It's how does this asset figure into day-to-day society? And I think with Bitcoin being a blockchain technology that hasn't been hacked, that is super secure and super layered when it comes to security, that's an adoption process. The world is now adopting more secure um, cryptography assets that protect our valuable information. And I think Bitcoin, as it rises, it introduced a new way to basically secure our assets, our digital assets in particular. So the adoption rate is really, I think, the underlying thing that will push Bitcoin, but also other crypto assets as well, is how does it integrate into our daily lives and make them better?
And I
Yeah,
can tell you how I do it. I mean, I see it as digital capital, as a store of value. I see it as uh, a digital house, a digital piece of property, a digital gold, a digital uh, savings account that I can take with me, and no, and the bank can't shut me off. Okay, I can't go into a bank today and take more than $10,000 out without having to ask a lot of questions. And we'll see you in 3 weeks if I can even find a bank that's open where I can go, and
right,
and go in. So again, I can take this. I can change my money. I can buy Bitcoin through any of these asset these functional entities like an ETF, or if I just buy Bitcoin straight, I can take it out and put it on a smart uh, storage, cold storage, take it with me anywhere, plug it back in. I can put money, I can buy it with US dollars, I can buy it with pesos, I can buy it with whatever, keep that value. I can move somewhere or go somewhere, take it out. If I'm in Mexico, take it out 10,000 pesos or 20,000 pesos out of my Bitcoin. Okay. But still keeping my Bitcoin, go spend my vacation and then come back. And if I have any left, I can reconvert it back into Bitcoin. And the value goes up 60% a year over the
right.
last 4 years. And I don't have to worry about a bank account. I don't have to worry about ATM fees. I don't have to worry about, my bank closing down or being shut down on Sunday and I can't get my assets or anything like that. So that's how I use it.
Yeah,
Okay.
cool. All right.
So when you look at the ETFs, here we talked about BlackRock, that Bitcoin ETF, the IBIT is now bigger than their gold, their IAU ETF, and it's done that in less than a year. Okay, so you can see part of what Trent was talking about. The adaption is really quick, at least in this. So again, and then Bitcoin ETFs are outperforming bond ETFs and beginning to gain a place in the standard 60-40 investment portfolio. Soon, 1 to 3% allocation will move to 10 to 20%. If you looked at it, um, the CEO of TradeStation, the CEO of BlackRock have come out and now recommended up to 2 to 3% of everyone's portfolio of their clients be placed in Bitcoin now. And if you look at the trillions that those companies have as far as client assets, that
Yeah,
is a lot. Okay.
that
And
is
if
a
they go up to
ton.
10 to 20% allocation, that's even more. Go back to my original thought. There's only 21 million of these. Okay. So as it gets scarcer, what's the price going to do? My mind, from my economics degree that I dusted off from a little Big Ten university sitting here in the middle of the country, price will go up, is what they tell me.
Yeah.
Okay, and they gave me a piece of paper that said I have a degree in economics, so I have to believe it's true because they taught me that.
Yeah, I think it is adoption and scarcity.
And here it is. I mean, these are the type of entities holding bitcoins. ETF, okay, they hold $106 billion, and uh, these are probably or 5.8%. These are probably low now. Countries
Yeah,
hold 2.5% of Bitcoin. Private companies like not MicroStrategy, but just private companies that are out there not on the stock exchange, 1.7%. Public companies, ex miners, this is like MicroStrategy, it's like Square, it's like Tesla that own 1.6%. Mining companies own 0.3%. You're seeing mining companies such as Riot and Mara now come out and buy Bitcoin, using the strategy that MicroStrategy has and increasing their treasuries of Bitcoin. So total, you know, these categories here are 11.9%. Well, who else owns it? Well, retail people got in early. They own it.
Yeah. There's probably the guy we deem the richest man in the world probably is not. You probably have some individual who has been buying Bitcoin since day one and has been holding it, and he's probably worth probably $1 trillion. It's just a matter of figuring out who he is.
Well, you can go and you can actually get reports of wallets with Bitcoin in them. And I think I don't remember. Maybe you know what percentage of the wallets Bitcoin has never moved out of it once they put it in. It's pretty
Oh,
high.
well, I know what is it like? There's 19 thousand Bitcoin available. Is that right? 19,000.
No,
That
no,
is
million.
million, 19 million. That is on the market right now, like in the system
That has been mined.
that has been mined. And from what, if I remember right, and my numbers may be off a little bit, 15 per or 3/4 of that are have never been sold. They've been bought and never sold. So there's really 25% that is in the system that is being traded. So if you have these ETFs, like iBit buying every day, you're only buying what is available, which is roughly probably 25% of all Bitcoin that's now in the system, which means it's just going to drive it higher, even more so. Whereas if you had all 19 million available, does that make sense?
Yeah.
Yeah. So
Well,
it's a fractional amount.
people will say, well, why does it go down then? Well, you're going to have people who will sell for profits. You've got options trading now. You've
Oh
got
yeah.
futures trading now. So you're going to have and that's part of the key of success of MicroStrategy is the volatility. Okay. Um, so you got
Yeah.
options traders, you know.
Yeah. It is because there are derivative markets now able to um, create derivatives like options or future contracts against Bitcoin, you're going to get a exponential acceleration in the volatility of Bitcoin because of just the basic mechanics of the stock market and how it works. So
Yep.
that's why you see these massive volatile moves that sometimes, put shivers down your back. But over time, that volatility will plateau at some point because
Yep.
of what's available.
Yep.
Yeah. So,
Anyway, this chart was as of November 12th. This was right after the election. I assume that all these have gone up quite quite a bit as we
right.
saw the price of Bitcoin went from the mid 60s to six figures. So institutions are buying Bitcoins now. This is part of the demand side. Pension funds, sovereign wealth funds, uh, endowment funds, they're all buying Bitcoin. You can go see that. We've got U.S. Bitcoin ETFs are buying Bitcoin. Okay, just back in November, after the election, you can see 5 billion in 6 days of Bitcoin, like you were talking about, Trent.
Yeah.
Um, Corporations are buying Bitcoin. You got the miners, crypto exchanges, MicroStrategy, Tesla, SpaceX, Block, plus a whole bunch more. Amazon is looking to buy it. Microsoft, they just had a shareholder vote. Michael Saylor went out there and did a 3-minute presentation. They decided not to. Uh, you've got like Warren Buffett, who thinks that it's rat poison. He's got $325 billion in treasury bills, where it's estimated he's losing 3 billion a month just because of monetary inflation,
Yes.
because the dollars are being devalued at a higher percentage than he's making in his treasury bills. So I am a shareholder of Berkshire Hathaway, and I would rather have that fund be growing exponentially as opposed to going down because of monetary inflation. But that's just his way of investing. And if you're a shareholder, that's what you got to deal with. Governments are buying Bitcoin. Okay, the U.S. has 208,000. Trump is looking at putting a strategic Bitcoin reserve. There's a legislation in the Senate to buy up to $1 million over the next 4 or 5 years, or a million Bitcoin, I should say. China has some, Bhutan. Even the Russia has now looked at putting in legislation to buy Bitcoin in a reserve. Okay, You're seeing states, 7 states, Texas is just the latest one, who are pushing legislation to open up Bitcoin reserves. You've got cities like Vancouver doing the same thing. So you're seeing government, you're seeing business, you're seeing individuals in countries buying Bitcoin. The demand is continues to go up. Um, and again, what kicked this all off was a change of administration. The administration that's currently in was seen as anti-crypto and anti-Bitcoin with their Treasury Secretary and the SEC director, and now those are all being replaced. Even at one time, Donald Trump didn't believe in Bitcoin. That's not unusual. Ray Dalio didn't believe in Bitcoin. Uh, Fink didn't believe in Bitcoin. Just a lot of people did not believe in it and have switched around now, and now their companies own Bitcoin. Okay, J.P. Morgan owns it. Uh, BlackRock, of course, owns it. The guy who owns Trading Station. They recommend 2% to their clients. Again, so what we see with the Trump red wave is the end to war on crypto from a government point of view, setting up a digital assets framework, so more regulation on how it's set up. Okay, accelerated institutional adoption. We just went over and saw how all the companies and everyone are now adopting it. More favorable tax laws and a strategic Bitcoin reserve. So this was really the catalyst in my mind that really kind of pushed price action to move before the election. There was some doubt if the current administration would remain and continue, but even under the restraints of the current administration, we saw Bitcoin grow from 20,000 to 60, $70,000 a coin, and now it's anticipated with a more favorable government and administration that you could see this asset class grow even further.
Oh
Okay.
yeah. So Mark, I wanted to jump back to what we were talking about, the availability of
Okay.
Bitcoin. Let me
Yep.
give you a couple of stats. There's approximately 15 million Bitcoin, or 78% of it, which is now in cold storage. And that means it's Bitcoin that has been taken out of the network and is put on what we call a wallet. And it's a secure wallet, so it's not available on the global internet. Um, the other element is 20% in circulation hasn't moved in 5 years, meaning they bought it and they have yet to sell it. And this is the one that's a little staggering. 3.84 million Bitcoin may have been lost due to forgotten or inaccessible private keys. When you have Bitcoin and you download it, you have what is called a key. It's a encryption key that for you to move that, you have to have that key. And a lot of people lose that key, or they lose the wallet for which they put the Bitcoin on. So
Or they
roughly three,
die.
or they
They die. They don't
die,
tell anyone about it.
right? And that's 3.84 of that. So if you have 21 million that will be available in 2040, I think is the date, the last Bitcoin will be mined. Just take 3.84 million right off the table because it's been lost. Now you've got roughly, was that, bring it down to was that roughly 17 or so trillion, I mean million coins.
Million.
15 million of that is in cold storage. All right. So you now got 2 million Bitcoin that is supplying all the demand for it right now.
And not even that, because you could have your Bitcoin on an exchange and just never trade it, you
That's
know?
true. Yeah.
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 That's,
So
yeah.
when it comes to that whole scarcity, it's real scarce. And that's why we're seeing I think this demand for it is making the price moves that we're seeing in the last 12 months pretty substantial.
Yep.
Um, yeah.
And
So,
that's why you're seeing, Tom Lee came out and he's pretty respected, the fund stack guy, and he's predicting that with this with this, open administration and a bunch of new congressmen who are pro Bitcoin and the fact of the scarcity, he's predicting $250,000 Bitcoin by the end of the year of
Wow.
2025, not 2024.
So, oh, holy cow.
And that's Tom Lee and Michael Saylor, who calculates it all out. And you can go find his calculator. He's just estimating that over the next until 2045, on average, Bitcoin will rise in value by 29%. Okay. And so he's got a $13 million tag on it in 2045. So, and I think Kathy Woods has a very high $1 million tag on it. Now, again, these are predictions, but it all comes
Yeah.
back to supply and demand and the utility of Bitcoin for people who don't have the ability to be banked in an asset class that is growing. Okay.
Yeah. Yeah. Crazy.
Okay. So let's look at the economic impact. We looked at this, okay, before it was 900 trillion. Okay. And let's go forward. Okay. By 2045, this is from Michael Saylor, he believes Bitcoin will move from 2 trillion to 280 trillion. Okay. And the global asset value would move from 900 trillion to 4 quadrillion. Because, we're not talking about a pie and slicing up a pie. We're talking about a pie that gets bigger. Asset
Right.
value goes up over time. So the value of bonds go up, the value of real estate goes up, the value of money goes up. Money moves between these asset classes, and the value of Bitcoin goes up. So if it goes up that high, that's where he gets his 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 calculation of a $13 million Bitcoin in his base case. And right here is his base case, 13 million. At the time, this was July when he did it, 65,000. Of course, it's 107 now. His bear in 45 is 3 million. His bull is 49 million. Okay. He thinks as a percent of assets, Bitcoin will be about 7% of total global assets. His bull is 22. Market cap 280 trillion. A 1.303 trillion is his bull, and then ARR 2937. So this is his forecast, not mine. But again, when you go through everything that we've gone through with countries buying it, sovereign wealth funds buying it, companies buying it, individuals buying it, and we're not even through the first year of ETFs and institutional adoption, you know, that's where I get a little excited about this as an asset class. Again, it's
Right.
not financial advice, but it's something I hope that as we go through this, you look at Bitcoin a little differently than some of the people I talked to last night who have no clue about it and won't get into it because their mind is closed and I don't understand it. You have to
Here,
go out and
think
spend some time to understand it.
exactly. And think about this. We talked about this on our platinum call when we did this discussion about the Bitcoin. If it does get to $280 trillion in value, if you put $1,000 in, that becomes $155,000. I
Yep.
mean, holy cow. If you put 2% of your investable portfolio in it, over that period of time, granted you have to live that long, 155 times that 2% over that period of time is, projections. That's insane. That
Yeah,
changes lives
it
in
does.
such a big way.
And that's what I've told, when we started talking about this in the 2 Regular guys and on our platinum channel. And it was, I started talking about it, both of us, 8 months ago or whatever, because I have had this since 2020. And I know that our platinum channel, we talk about technical analysis, we talk about markets and market conditions. But this is such an asset class that I personally believe in that I told you a story that back in the day, 8 months ago, I was talking to my friends who were all old like me, and I was talking about Bitcoin, and they made fun of me and this and that. And I said, well, look, you guys, it's at $65,000. If you bought 1/10 of a Bitcoin, that cost you $6,500. Okay, and that's your drinking budget for a month. Knowing my friends, and I said, if it goes to 100,000, you've now got $10,000. You've gone up, $35,000, $40,000. And so it has. Okay. And so some of them took my advice and now they're up and they're like, wow, this is great. How do I buy more? And the ones that didn't take my advice are calling me now and saying, how do I get into this? Because now it's $10,000 to get a tenth of a Bitcoin. But
Right.
if it goes to 1 million, you have $100,000 or 100,000 off of your $6,500 or your $10,000 investment. Okay. Of course, it can
Yeah.
go the other way and the world can blow up and, everything goes south. But
Yeah.
again, risk reward is what I'm looking at. And can it be volatile? Certainly. When my friends got in at 65,000, at 6,500 bucks, I went down to 52,000 and they're like, oh my gosh. But again, now here we are. So again, think of
Yeah.
it that way. You don't have to buy a full Bitcoin. You don't have to put your entire life savings into it to make generational wealth like you just went over, Trent.
Yeah. You don't. You really don't. And I think that's the beauty of it, because if you think about, a lot of these companies, we buy stocks every day, right? um, there are people involved. They can dilute their shares. They can embezzle money from the company. There's so many variables that can happen with a stock, whereas Bitcoin has no committees, no human interaction. It's all mathematically based, and there's a limited supply. And
No
when you
earnings report, no press releases.
right, nothing. It's just math, and
It's a commodity.
it's a commodity.
Yep.
But it's a very limited commodity that there will be no more made.
Yep.
Whereas most commodities, they'll find more gold, find more silver, they'll find more corn, wheat, and all that. So I think that's the appealing part to me is how do you eliminate the human element out of an investment? And this is one way you do it, and
Yep.
that's Bitcoin. So
I'm going to go through this was a good slide provided by
yeah.
Michael Saylor about Bitcoin, and everyone goes through this. I've gone through this. Michael Saylor went through it. I think Trump has gone through it. I think Fink has gone through it. I think Ray Dalio has gone through it. You start out, and I talked to a guy last night. He is number one. He is a denier. You know, you just deny it. It's crap. It's whatever, and then you become a skeptic. Like, okay, my friend got into it. He made a little bit of money, but I still don't want to do it. Then you're like, okay, you become a trader, you get into it a little bit, and you're like, okay, I'll trade in and out. I don't want it long term because I don't trust it. And then you become an investor. And I'm in this category. I've never sold mine. Okay, I bought it. I continue to buy it, uh, both in raw form and in ETFs and other instruments, MicroStrategy. And then you've got people like Michael say, or maximalists. Okay, people who put it all, they're all in. Okay, the whole
Yeah.
pile's in, and that's how much they believe it. And Michael Saylor will say, you either believe it's either going to zero or a million. And it's not going to zero, is what he says. And then you got people that say, well, I'm too late to get in, but if it goes to a million and you get in now, that's 90% increase. Okay,
Right.
to get to a million. Okay, and you don't have to buy a whole Bitcoin. You can buy a tenth of a Bitcoin. You can buy a fifth of a. You can buy 5% of a Bitcoin. You can buy $100 of Bitcoin. Okay, you don't have to. You don't have to do it. You can dollar
I mean,
cost average in. The
I mean,
model. Go
think
ahead.
about this. Most people who are listening to this will go to a coffee shop and spend $10 on a coffee, right?
Not me, but
At
some
least
people.
once a week.
Yeah.
Okay. Once a week. So that's $40. If you just bought $40 with a Bitcoin and just did that for the next 15 years, what's the return on your coffee versus your Bitcoin? You can buy
Yep.
a whole lot of coffee. It's
Yep.
it's it's just like saying I need to contribute to my 401k every paycheck. It's automatic. You do it. You take a percentage out, a certain percentage out of your paycheck, you put it in your 401k. This is really no different. This is
Yep.
really no different.
And again,
So,
we're not giving financial advice. You've got to do whatever's right for you. And again, study it. I've spent hundreds of hours studying this, and I still don't understand the whole concept of it, but I do understand supply and demand, and I do understand uh, uh, that the demand is high and
yeah.
supply is low. Okay,
Yeah. I
and
think
I've gone and I've gone through all these to this point, investor.
right, sure. Uh-huh.
Yeah, I think I'm almost. I think I was like I told you this weekend. I think I'm on the edge of this almost, but I'm not going to go there. I don't think. Okay, so again, Michael says everyone's against Bitcoin before they're for it, which is true. Okay,
Right.
and again, last night I met someone who was not for it, and I said, "Well, call me." in July when it goes to 150, and you'll call me and say, how do I get into this? And even Michael Saylor, here was his tweet in December of 2013. Bitcoin days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. Now, Michael Saylor's company owns 429,000 Bitcoin, the largest amount owned by a publicly traded company. And he personally owns, hundreds of thousands of Bitcoin, I'm sure
Yeah.
also. So again, uh, don't take it from me. Go and decide on yourself on your own. Uh, if it's good enough for you or not. I mean, I'm not advocating for it. I'm just saying there's an asset class out there that's performing really well. And a lot of people are chasing AI right now. We don't know what the effect of AI is and which companies are going to, benefit from that. We do know about Bitcoin. It's a mathematical, uh, engineered kind of uh, asset class that I understand better than I do AI. And it has seasons, and I can look at trends, and I can see what the performance has been. So I own it. Doesn't mean everyone else has to own it. I don't put everything into it, but I certainly have a percentage, in my portfolio of Bitcoin via ETFs, via raw Bitcoin, and MicroStrategy itself I own.
Yeah. So I own it too. I actually mine it or have mined it um, offline right now, but we'll be online hopefully early next year again. But I look at it as it's a part of the overall mix. I'm not a maximalist. I look at it as a way to outrun monetary inflation. And I suspect that is going to continue to be part of the hurdles that I'm going to have to face over the next, hopefully 40 years of my life. Um, and I'm going to have to be invested in assets that go up and beat that so I can do the fun things I want to do in life. And this is just in addition to my overall portfolio and my investment strategy. And I think it's like anything, if you don't spend the time to study it, to dig into it, to watch YouTube videos, to read about it. I mean, go to the white paper that was written that originated this whole thing. It's 9 pages long. Read it. Read it twice. Read it 10 times. But take some time to study it before you make that decision of I just don't believe in it. Most people who say that haven't spent a minute looking at it. It's like anything else. If you want to understand something, you have to put the effort. This is the white paper that was written by Satoshi Nakamoto. Nobody knows who it is. It could be an entity, it could be a person, it could be a man, woman, who knows? But at the time when he wrote it, it made an enormous amount of sense. And today it even makes more sense, in my opinion. So, yeah, I
I
think
agree.
that
So anyway,
covers it.
yeah, I think this is trying to help regular people like us old people. Trent and
Yeah,
I, we're not that old, but we're old for Bitcoin for most people. But
right.
I think that why should all the young people and banks and rich people have all the fun when we can get in on some of this too? And you know, and
Absolutely.
and like I said, I wouldn't put my whole house up for it. A lot of people do, but you don't need to benefit from what I think is going to happen in this field, especially with this new administration, especially with the adoption that we're seeing, and especially since there's only 21 million, and as you said, 4 million are gone, and there's only about 2 million on exchanges right now. So do the math. Do the math.
Yeah. Exactly. Well, with that said, please hit the like button and the subscribe button and leave some comments. We'd be really interested in your thoughts, what you would like to know more about Bitcoin. In future episodes, we'll talk about mining and what mining is. And we're also going to get into other types of crypto that are available and what their purpose is and is it a good idea? Thanks for subscribing. Hit the like button. Check us out at www.bestofUSinvestors.com. Check out our services. This kind of stuff is available in the platinum level, which we have a 14-day trial. Along with after 14 days, it becomes $60 a month. In that package, we have charts of interest, and that is our swing trading, below 200-day moving average ideas that we release on Sunday, along with momentum trading ideas, along with our price range projections. Every Monday, Tuesday, Wednesday, Thursday, Friday, we send out a morning newsletter with updates on all of that, along with Kerry's portfolio, the cheat sheet, and a handful of other things. We got the Friday 11:30 call and Kerry's 3 o'clock call. This is all for $60, folks. This is a whole lot of information, along with our Discord, where you get on, you interact with the tribe in our group of people, and you learn. That's what this is about. It's about learning and creating wealth and creating the financial freedom that you so desire so you can go do fun things your whole life. All right, so check us out at www.bestofusinvestors.com. We will see you next week. Have a great day. Peace. Live loud.
Happy holidays.
Happy
And
holidays. Oh, cool.